today we have Jubilee Holdings as part of financial analysis. In the audience, we have faculty and students pursuing different programs. As part of their journey, academic journey, they're supposed to analyze financial statements and just having appreciation of the nexus between business strategy and financial performance and corporate performance. So we are very glad today to have the CFO of Jubilee Holdings, Paul Mungai, and I will give him the honors to introduce himself and tell us whether he was an alumni of Strathmore.
Okay, thanks, and good morning all. When people say your name and they say your title, what is there left to introduce yourself about? But my name's Paul Mungai, as you've heard. Currently leading the finance team for Jubilee Group regionally. We are covering Kenya, Uganda, Tanzania, and Burundi, right? So we've got life assurance businesses, health insurance businesses, and asset management. And I'm sure you know more of Jubilee than I do, right? Because you're our customers, I would assume. If I'm not talking to Jubilee customers, I'm in the wrong place. No? I have been in finance for now 14 years, and actually started off here. Okay, so I did my CPAs here in Strathmore back in 2011. I had done my undergrad in KU, and I'm still here actually in the business school. Just upskilling myself with executive MBA and the likes. So I'm very much a Strathmore student as you are. Okay, so when you see me, know I'm one of you. That is as far as I'm going to go as far as...
Yeah, that's enough. Thank you and welcome. Let's welcome him with a round of applause. So we're going to have two sessions. The first session, we'll have a discussion with you. And then after that, we're going to invite students and faculty to ask questions. So let's just start with the first question. Describe the dynamics of being a CFO for a group such as Jubilee Holdings. What are the key three things that you have to think about on a daily basis?
So I'm going to marry it in two ways. So there is, we've got to understand what the role of a CFO is, right? And then be able to extrapolate that into then how a day looks like. But I'll come to the day shortly. I'll summarize the role of a CFO into four sections, which I would say sequence each other. Okay, so you're not going to be able to do number two if you've not effectively done number one. Okay, so they're sort of building blocks. So the first thing is, as a finance department, we're a control function. Okay, so you remember the 5 functions of management, right? So I think they hover around planning, controlling, coordinating. You remember staffing and controlling. So finance is primarily a control function. So we are what an organization calls the first line of defense. So we are fully in charge of policies, compliance, processes, and that is why we are closely associated with running the audits of the companies. So that's the first role that the finance team is given. That role is very basic because it's the building blocks or whatever else that we do. So we are in charge of making sure that the information that is coming in as far as finances are concerned is accurate, correct, fully reconciled, and the organization can be able to make decisions out of that information. So that comes through making sure that the control environment is very clean. Very clean meaning the data is correct, its sources are correct, supporting documentation and what likes are all correct. Then now the organization begins. So that's our first role. The second one is the one that I know most of you would associate finance teams with, and that is reporting. But that's mostly historical. Okay, so today, I don't know how many of you have interacted with our half-year results for Jubilee, telling you where we closed as at half-year. That is historical. And that's our role. So we take the data, we put it into the financial reporting standards, and we tell you how the company has performed. Now, that is a very, 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 very major part of what finance do, but it is not all, right? Then immediately after that, then we proceed to moving away from historical to being a bit futuristic, which is where forecasting begins, which is where outlook begins, which is where budgeting and planning comes in. Again, that is a central function that we run ourselves. And then finally, which is where the CFO's work becomes very exciting, is insights and value-adding sort of analysis. Now, in today's world, when I was growing up, for as long as you can be able to dance around with an Excel, right, and you're very good with data, then you have a job. Today, the second part, which is the biggest part of finance, can be fully automated. So today, Excels and QuickBooks and all these things that have come up and apps can actually be able to summarize reports for anybody. What really makes you, what makes us as CFO important is being able to give insights into the business on where the business should do based on the data. So that's the role of a CFO in a nutshell. So if I was to summarize then how my day looks like, it'll be very difficult. So allow me to summarize it for you probably annually first. Then when you look at how my year looks like, then you'll be able to pick in a single day, depending on the period, you'll know what is top of my mind. So January to March, for those who know, I'm fully booked by the regulator. That's your CMA, Capital Markets Authority, or your, for our industry, Insurance Regulatory Authority, plus KRA, because they're waiting for corporate tax, plus. So I'm fully booked by the regulator. Why? Because that is when your PwCs, your KPMGs come into the building, and they want to make sure that your last year's results can be signed off on. Okay? So January to March, there's nothing else on my mind. I've got to be able to make sure that fully audited results are sitting in the papers as and when they should sit in exactly the way the standard stipulates them to sit for all the stakeholders, including yourselves, to consume and understand what Jubilee was able to do in the previous year. April to June, I'm fully booked by the shareholders, and I'm going to cross my fingers at a couple of shareholders here, people who have bought our stocks, right? So the shareholder is waiting now that the audited results have been finished. Can we prepare for the AGM, and we want to know whether you've got good news for us, right? Are you going to pay us dividends? And the likes. So that's April to June, because we normally have our AGM around June. And it's a very, very engaging process. And that is when also the investors come around wanting to know, we have seen your results, can you give us a little bit more insights? What should we look forward to in the coming year, and so on and so forth. July to September, like I said, in one of the roles of a CFO is forecasting and budgeting, is when now we start looking at the current year. So the rest of the departments in the organization have been working very hard. So those ones who are in charge of sales, marketing, customer experience, all those have been working very hard to make sure that we are meeting the targets that we had set. We meet them in July, and we start evaluating whether they are actually on course with regards to what we wanted to do that year. Then we do some bit of extrapolation, and we say, okay, where are we likely to close by the end of the year? And we start making amendments and adjustments, and making sure that the budgets and the plans are aligned to us being able to see what we can be able to do that year. That happens between July and September. Then immediately after that, between October and December, you know what they say about that phrase for what's the bottom line, right? When the story is told at the end of the day, what's the bottom line? That is what now we start focusing on. It's about the profitability of the business for the remainder of the 3 months. So that is when we really focus on making sure that we close with reasonable figures that everybody, and especially our investors, are going to be happy with. And therefore, we take central role in guiding the departments around where should we spend, where can we get a little bit more of sales and revenues. And this is the kind of profitability that we might be able to close with by the end of the year. So if you want to ask me what my dynamics are on a day, so depending on what month we're talking about, then you know what I'm actually, what's preoccupying my mind. If I can summarize it that way.
Thank you. Looking at your top line, revenue grew by 8% in 2023. And then in 2024, you're on course to maybe above 11% annualized basis. Can you describe the revenue drivers for us?
So just to give you the specific numbers, I know you're all aware for insurance industries, we have switched over from IFRS 4 to IFRS 17. Okay? So the standard has, financial reporting standard has, went live in 2023. So we are no longer reporting under IFRS 4, we are now reporting under IFRS 17. And the definitions of revenues have now completely changed. So as at half-year results, which I know you've already seen from what we were able to send out to the market, our insurance revenues grew by 28%. So what is insurance revenue? So as I said, we are running health entities, we've got life assurance entities, and we've got asset management. So what they call insurance revenues is the premiums that we have been able to sell to you guys, and you've become our customers, and you've found our brand trustworthy, and you've been able to book yourself certain products. So you've insured your parents on health, you've bought yourself an education policy for those who are in that space. The revenue, our main revenue driver was the health company, which we have regained our #1 position as of this year, regionally. Okay, so from Kenya, Uganda, Tanzania, and Burundi combined, Jubilee is now #1 as far as health insurance is concerned. And this mostly came from our corporate space. All our revenues are broken down into two areas. So you can either drive revenues through corporate, which means B2B, okay, business to business, or retail, which is B2C, okay, which is individual policies that have been sold to the likes of you, right? So individual. So our corporate space is doing very well, and therefore it almost tells you what we're going to be thinking about in the next coming months and years, is to really build our retail space. So health is the #1 driver of our revenues. Life is following closely behind. I think we're #3 regionally, with our Uganda and Tanzania markets growing very well, double digits growth in our life space. Asset management, which is the company that deals a lot with how we manage assets and our investments, doesn't make part of revenues. It makes part of profit, because what they make out of the business is managing your funds, and then you pay them a fee, okay, for taking care of your funds. It is the smallest company in the group at the moment, but growing very rapidly. I think this year we have crossed the 2 billion mark on retail assets under management twice. Okay, so it's because there's a lot of awareness about, and especially in the Kenyan microeconomics, right? You've got to really think about your future, and for every coin that you're having right now, you need to think about how you can actually be able to grow it. And the asset management companies, they're providing those type of solutions for you to put in your money so that it can grow as well. So that is also growing very rapidly, and hopefully in the next couple of years going to be one of the major contributor of the group profits going forward.
Health is big for you, and we've seen the rollout of SHIF. How is that going to affect your business?
Interesting question. So I'm going to be very careful here how I manage the prospects of SHIF, right? But our role is to partner with the government to actually make sure that your health needs are taken care of. Okay, so we don't look at it as one that we need to compete with, rather than the one that we need to complement. Okay, and truth be told, it's going to take some bit of time before we understand the full, benefits of SHIF compared to what NHIF was offering. For us, we're still going to be able to make sure that the buffet for you is there, right? So out of what you're able to get from SHIF, what else can we be able to provide for you? And you make sure that you're fully taken care of, your needs are fully represented. But in terms of immediate impact, I think we don't see it being a major impact in the medium term. As they settle down, as they set up this new thing, as they set up how it's going to work, as they set up how they're going to be able to serve you better. In the meantime, we think status quo is going to be maintained. Okay, so in terms of our projections, we are fairly confident that we can continue to offer you what we offer. It's very competitive, and that's not going to be significantly affected. Probably in the next 1 or 2 years, then we could come back to the table and see the impact of SHIF holistically. Then we will probably readjust and see what else to offer.
We saw you divesting from general business through your acquisition from Allianz. What explained that? What was the strategic thinking behind that divestiture?
Again, for those who are not aware, 3 years ago, we had the full suits of insurance. Okay, so we were offering general insurance products, which is your P&C, property and casualty offerings. Then we had health, we had life, and then we had asset management. About 3 years ago, or 2 years ago, we felt the need to relook at the general space. And so Allianz stepped into the space, and we had a conversation about how we can enhance our general offering using their expertise in that space. I mean, Allianz is one of the world's biggest insurance company, and I mean world, globally. And that's what that's what informed that decision. So we gave them a bit of the business that we had. And therefore now they're able to bring their technological expertise, their global coverage, their vast knowledge in general insurance products to help us offer the market a little bit more better in terms of from a general space, right? So we are still significant owner of that business. But they're basically having the controlling stake. They're basically the ones calling the shots, and we allow them to because they've got the expertise to be able to do that. So it was really an informed decision around can we be able to partner with somebody who can be able to offer general insurance a little bit better, and therefore Allianz stepped into the space, and I think they're on their way to being able to realize that particular strategic focus.
Okay, in as much as health is big for you, it still gives negative insurance results. What are the challenges with this business class?
So the health business is what I call a thin margin business. So you've got to be able to, number one, be able to have a very, 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 very big book for you to be able to realize very, very, very good margins. So health business is, you see, we take care of your health needs, right? So we partner with the various service providers to make sure that you've got enough coverage for you to be able to access your health needs anywhere you are. And we don't want to make it very pricey for you, okay? So we've got to be able to make it affordable while at the same time being able to meet our promise that your health needs are going to be taken care of. So it's a very, very, very thin, it's a very, very, very thin margin business. So depending on the macroeconomics of the day or the events that are happening around us, the cost of healthcare can go up and down, okay? And we don't want to pass that on to you. So we try our best to make sure that we're managing the cost of claims as much as we can so that doesn't impact your pricing. So you remember, for example, like in the COVID year, right? That was a very, very, very difficult year for insurance companies because then you've got health costs that actually really, really shot up because of the various sicknesses. And that is not a risk that had been previously priced for. So we work very closely with the service providers to make sure that the type of billing that we see helps us to actually make sure that we do not make the cost of healthcare too high. Then on top of that, and you will see that with Jubilee quite often, and you will see it as part of the packaging of the integrated report that in terms of the information that we're giving you, we're investing very heavily in technology. This is to ensure that we can actually be able to be very efficient in how we offer the service that we're offering. On top of that, for us, health is not just about taking care of your health costs, but it's also taking care of your health holistically, which is why you have seen, and I'm hoping some of you have already downloaded the app called Meshafiti, right? Where we're encouraging you to, at the very least, increase your steps, increase a lot of walking, make sure that you're managing a more healthier lifestyle. The other day we were running the Live Free race, right? Partnering with sport to get you engaged and sort of promote a very healthy lifestyle and culture. So all that is geared towards minimizing your health costs, which minimizes the price of your health insurance that generally just makes the health space better. But to answer that question, health business is a thin margin business. So it's about how well we manage the costs associated with the health space so that we can continue to offer you affordable healthcare.
I saw that you don't do a lot of reinsurance. Why is that the case? And could this help in improving your margins if you were to reinsure some of your business?
Reinsurance?
Yeah.
I will not speak too much in the reinsurance space because it also comes with the regulations. Okay, so you know in the region or in Kenya we've got companies that carry the reinsurance license. So you've got your Kenya Re, you've got your Africa Re and ZEP Re. What we do, which we would call reinsurance of some sort, is co-insurance. So whenever we get into a conversation with a business whose risk is very big, right, and we cannot be able to manage that whole risk, we partner with the rest of the insurance companies where we co-insure. So I will take a portion, Jubilee will take a portion, Britam will take another portion, or UAP or Major will take another portion, and so on. So co-insurance exists. In fact, it's part of the biggest, it's one of the main revenue contributors to us. But the insurance aspect itself, from a regulatory perspective, then we've got to comply with those who have been given the license to provide reinsurance.
In terms of profit margin, I saw for the life business, it contributes 30% of the revenue, but 70% of the profit. And then the opposite is true for general. How is that the case?
Let me start with the good news. We've got 21% growth on our profits as at half year. And that's a factor for you guys, which is very simple. Revenues are growing faster than costs, which is what you want for a business, right? So our revenues were growing by 23%, our expenses were growing by 12%. But yes, the major contributor of our profitability is as follows. So we have got contribution from the health business, which I've told you is a thin margin business. Then we have got life, which is a significant contributor to profits. And then finally, our investments. So this is how insurance works. We pool your premiums. And to make sure that we have got a healthy bottom line, can you hear me? To make sure that you've got a healthy bottom line, we invest those funds. Okay, and that's why we've got an asset management company as well. And a lot of those investments then add onto what we're able to make from insurance results. So the reason why health company is big in revenues but small in profits is because the health business also carries the biggest part of the claim cost as compared to life. So for example, if you think about the life products, what we would call risk claims will be disability, death, and so on, right? You don't often see those happening as often as you rush into a hospital to get yourself checked up, right? So the health space has got huge volumes as far as claims being incurred is concerned compared to the life business. So that is why most of the profitability is going to come from the life business. But the biggest one for Jubilee will say that we have also done a lot in terms of diversifying our investments. So we've got profits coming from our associate companies. Our associate companies cut across various industries, our biggest one being an energy company in Uganda called Bujagali. We have got associate companies with IPSK. I hope you guys know the IPSK company that deals with Farmer's Choice and all these things. They are part of the group. They are part of our associates. We have got PDML, which is a real estate company. So we have diversified our investments to make sure that we are able to pull profits from by managing the risk of where the shortfall might come from. But the life and the health business separate in terms of profitability because majorly of the claims experiences of those two books,
yeah,
which is fairly very different.
Yeah. Yeah. So let's move to investments. The bulk of your investment is in government paper. What's the rationale for that? We
sort of are very thankful for the 2023 microeconomics, wouldn't you say, where the interest rates were going quite high. And who wouldn't take advantage of that, right? So when you've got your risk-free rate going up by 600, 700 basis points, then you take full advantage, right? Of course, you've got to manage the, what do you call it? Concentration risk, right? You've got to make sure that you're not too concentrated on government papers. But in 2023, we made an active decision to take advantage of how the microeconomics were going. The returns that we were getting out of the government bonds for a risk-free rate were a no-brainer. So we got into that space, and you want to make as much return as you can on those high interest rates. Yes, and they're risk-free. So so you're not gaining any risk by investing in other than concentration.
I also see that you're doing allocation on equity, yet it has some serious fair value losses. Why do you continue investing in equities?
So we've got quoted and unquoted equities within our investment portfolio. And you're right, the major focus on those investments is capital appreciation. But the equity market has been a bit depressed. So you will notice gradually we let go of non-performing equities and keep on the ones that have got dividend income. So equities will help you in two ways. So once the price of your shares go up, then you've got a good fair value coming into your books. But that's not the only reason you invest in equities. You also invest in equities if it can give you a significant dividend inflow in terms of cash, right? So most of the equities that we have invested in, a good number of them do give us very good dividends. Okay. So we're happy to keep those for as long as the dividend income comes in.
It's okay.
Yeah.
In terms of dividend policy, how is your dividend policy like?
Now this is, I need to teach you something.
My understanding is that listed companies are supposed to have a dividend policy.
Correct.
Yes.
Which is why my colleagues are smiling here. So as a listed company, there is what you call public information and can I say private information? You need to be very careful about the kind of information you can be able to share publicly for certain regulations, especially around insider trading and things like that. But this is what I will say. We are a very proud dividend payer. When you compare us in the insurance industry alone, forget the banks. So financial services, you've got banks, asset management, and insurance companies. So walking away from banks and asset management, when you look at us from purely the insurance industry, Jubilee is the only consistent dividend payer for the last 10 years. Okay, so as an investor, I've already told you, if you're thinking about equities in the insurance space, then you know where to go. Okay, so of course, that is guided by an internal dividend policy that looks at a couple of things, and I'm going to be purely academic, so I'm not going to give you Jubilee specific information, right? But we look at, for example, capital adequacy. You know, the regulators like CMA and Insurance Regulatory Authority wants to know whether you've got healthy capital before you pay your dividends. Obviously, the level of profitability that you're having, your level of cash flow and liquidity needs, which is for you who are doing financial statement analysis. If you're at a significant liquidity risk, then there's an amount of cash that you can't part with, right? So then dividend policy is supposed to take care of some of those checks. And the likes. So there is a framework that we work within for us to be able to pay dividends, and that framework is built on those financial risks being properly assessed, including your capital quality, and then eventually the level of profits that you're able to make and how much of that you're able to part with back to your shareholders, including return on equity. Here I must say, a company that is making profit, the company that is making the most profit from a PAT or PBT perspective is not necessarily the most profitable. Okay? The most profitable company is measured on ROE. So for you to be profitable, even though you're making high profits, paying dividend is one of those things that allows your ROE to grow. Because then you're giving back capital to those who have given you, keeping your capital base lean and fit, right? That ensures that it's called being able to do more with less, if I can put it that way. Okay? So we've got a dividend framework that allows us to make sure that we have checked all those financial risks, even as we...
Yeah. So finally, on my side, in terms of investor relations, how do you engage your investors? Because you really want to see people investing more in the stock market. Yeah. Do you deliberately engage your investors or prospective investors?
So I will say that we've got time to time do have investor sessions. Most of them are investor-driven, so they'll make a call on us and we'll prepare to engage them. So if any of you is a prospective investor within Jubilee, we promise you as soon as you reach out and say you want to have a conversation with us, we'll create the table and we'll avail ourselves to engage with you. But we do have those quite often. And the main aspects we talk about is the outlook of the business. You see, investor is futuristic. It's so good what has happened in the past, well and good, but where are we going? So we focus our conversations around our strategy, how are we going to grow our market share, how are we going to grow profitably, how are we going to make sure that we are managing the financial risk that keeps a business afloat throughout. We don't want to become the legs of the businesses that have fallen out after becoming so big, and you know most of them, I'm not going to mention them. And those are the kind of the things that we give you insights about what we are doing, so that as you go back and you're thinking about how to invest or how to relate with us, then you've got the information that you need. There is strategic, specific information within that conversation, which has to be very, very, very specific, depending on you call on us and we're able to prepare that sort of information specifically for you. Okay?
Thank you. As to go to the Q&A session, do these young people take up insurance? What are the trends, demographics?
Gen Zs. It's the most interesting generation of our times. And I hope you do take the services that we offer as part of your key decision-making considerations, and I'll tell you why. So the way we think about our customers is from all the way from birth all the way to that other word that I'm not going to use. Okay? And we have you fully taken care of. I'm sure for you guys, for most of you, hopefully, from your young age, there was a policy that was running for you in terms of making sure that you're able to enjoy this beautiful education that you're having now. You get into the space where you can be able to make informed investment decisions for yourself. We have got that taken care of you. We have got money market funds. We have got things that we can actually be able to offer you that are going to grow the little that you're making at the moment. Post that, then you guys are thinking about settling down. You've got thinking about having families. Eventually you're thinking about retiring. That entire life scope is fully taken care of by Jubilee. You just need to connect with us at the point that you feel is important for you. So for those of you who are in whatever stage, or your loved ones at whatever stage they're in, there is a product that we can actually be able to partner with you on to make sure that you're fully taken care of. That is our motto, is live free. Okay? And I know these young people, they don't like living with burdens in their head. We are guaranteeing you that you can actually be able to live free. So just partner with us in any of our offerings across that entire board and join us in living free.
Thank you for that session. We can clap for him for that good session. Great. So now we are moving to Q&A. So if you have any question, please put up your hand, and then you'll be given a mic. Start with your name, what you do here, and then you can pose your question. Thank you.
Hi, my name is Jude. I wanted to ask, the way I see insurance is that it's more of a luxury than a necessity in terms of a product. That's why I would think it's not as big in Kenya as it would be in like first world countries like in America or even in South Africa. So what are you guys doing to tap into the untapped market over here in Kenya, where I would think a very small percentage of us are insured to the level that other countries would have been. Yeah, so please touch on that.
I'll take that one. Okay, so that's a question of penetration, insurance penetration, especially for this country and around the region, which is quite low compared to the likes of South Africa, which are in the region of, I think, 14-15%, and developed markets, which the penetration is just quite high. A couple of things. So our responsibility is to, number one, insurance is about the type of offer and the type of distribution. Okay, so while, for example, you find companies like Safaricom having been able to get to the last person in the village was about their distribution capabilities. right? They were available literally every corner, okay? So we have a responsibility to listen more in terms of what type of product features you guys are looking for, and we're able to go back and actually prepare that for you. But most importantly, even what we offer, how can we be able to avail it to you at your convenience? And I think that is where the penetration conversation is going to start accelerating. So our distribution, so we're thinking quite well about, now we're in a very significant digital space. So how can we get products to you digitally? Okay, so we no longer necessarily have to rely on intermediaries, okay, financial advisors to get to you. So you can be able to log in on your app, you can be able to interact with us and our products, and at the touch of the buttons, you're able to get your offering exactly where you are. So what this is going to do is that it is going to help us start distributing in the corners that I would call dark in the past. We're not able to get into that space, right? So now we're going to take full advantage of technology, full advantage of the digital age, full advantage of you guys who technology is not this thing that is archaic to you guys, and therefore selling of insurance is going to become far much easier, less costly, which means it's going to become affordable, and then the penetration will just follow. Yeah?
Next. Just next to you there.
Hello, good morning. My name is Karanja. So I had two questions, basically touching on his question. But the first question was, based in the insurance business, what would you say as a CFO you'd see are the biggest challenges that you face within the industry today? And the second question touches on growth. So how do you say that the Jubilee balances growth in mature markets versus emerging markets, and how do you balance the risk associated with both?
Okay. I'm going to give that a try. So the first one is the two things that gives us sleepless nights, right, would be in the space of fraud, right? So a lot of you know in this digital world, the more digital we get, the easier it is to get all manner of digital attacks. So fraud is a very, very, very big space that we look after on a daily basis, and that is making sure that our IT security is high tech. We are compliant in terms of the partners that we have. So we partner with banks, we partner with hospitals, we partner with a lot of teams that have got access either into our data or access into the value chain that we offer to the customer. So one of the biggest things that we try and manage is the fraud space. Okay, and back to the question that was being asked around the margins that you see for the health business are materially driven by how well we can manage fraud in that space. It has primarily and historically been a very, very, very big problem for us. Now, in terms of growth, I will say this. Whenever we talk about where your growth is going to come from, and I will point you towards two companies that have diverged in this sense. South Africa is at 14, 15, 17% penetration. So when the big companies are sitting down to figure out where growth is going to come from, they only have one alternative, which is M&As. Mergers and acquisitions away from South Africa, because they have, by and large, exhausted the South African market. The advantage we have in the region we're in is that the insurance penetration is still very low. So the size of the pie has not even been touched on. So even without having to think about going outside, we've got to think about how we can actually be able to move the penetration from we're below 2%, right? Below the 2% to the regions of those 15, 16, 20s that the rest of the world is enjoying. That move has significant growth opportunities within it. So it's about, like touching on his question, is about what type of offering are we giving you guys, right? How are we developing products that you guys can be able to associate with? How does this make sense for your life journey? Which is why I gave you the package of how we are covering you from birth to the end. And how do we bring it to you, to your convenience? Once we are able to answer these questions, and we actually be able to increase the size of the pie, and that is where the growth is going to come from. At least regionally for us, that's the first thing that we need to focus on.
Sorry, my name is Wayne. Just before you move on, I have a question regarding fraud. what is what have you done on fraud? I know, as you've said, health insurance is the biggest revenue generator. And I know it could be better if we reduce the rate of fraudulent claims in the health insurance. So what are you doing about it? The most specific thing you're doing about it? Yeah.
Okay. So I will give you some specifics around the technological investment we have done in that space. So we have partnered with some tech companies around the processing of claims. And what that does is we are able to embed fraud detection capabilities within that tech. So as the claims are coming in for processing, given various setups within that tech, we're actually able to detect where the fraud is actually coming from. So one of the major KPIs we have within the health companies is level of fraud detection and therefore level of fraud, can I say, elimination. Those two. So it's also very tech-driven. We've got a couple of partners who have invested very well in that space, so they're able to provide us liquid gold as far as being able to detect fraud is concerned and being able to eliminate it. And therefore, that allows the claims processing team to be very efficient at knowing what is the actual claim cost. Secondly, in the past, we would have, and this is in the people space, which also speaks to job opportunities. Within the health companies, we are now being very deliberate around having doctors within the space of claims management. So they're able to actually relate with the service provider language. So where in the past you would have a non-doctor trying to vet a claim and trying to figure out, you've billed me $40,000 for a cold, right? So what are these tests that you've done? Now you've got a doctor in that space who's able to give you very good expert information in analyzing what your claims cost should be. And then finally, the engagement with the service providers, right? So engagement with the hospitals, just making sure that we understand at the end of the day, the one that we are serving is the customer. So if we can minimize the cost, then we can be able to actually provide the customer better services and better prices for their products.
Thank you so much. That's why I'm happy you're here today, because at Strathmore School of Mathematical Sciences, we were having a research program, where we are trying to create a model that will help in fraud detection, especially in health insurance. So we're actually preparing for a hackathon. We would like you to join us. Thank you.
Thank you. So let's move to this side. We can bring the mic. Let's give it to, then we're going to go back to you. Yeah, let's give it to these guys here.
Hi, Ibrahim. I'm studying financial economics here at Strathmore. You mentioned that your revenue streams are usually divided into corporate and individual segments, and that your corporate clients are usually driving your revenues because they're performing really well. As a company whose revenues are really tied with the corporate uptake of your services, what considerations do you have to make, and the risk management strategies that you have to undertake to account for economic instabilities that may affect your corporate clients and their uptake?
Okay, so I'm going to answer that question in a way that looks like the solution is avoidance, but it's not necessarily avoidance. Our biggest space for revenue right now is corporate, and you're right. But then I told you, and I didn't mention that, we are then thinking significantly about how to grow the retail space. So the growth of the retail space allows us to sort of diversify our revenue streams. Now, the corporate space has two characteristics. One, it's very price competitive because you're dealing with big corporates that everybody is competing for. And then two, it has got significant volatility within your results, because today you've got a significant account, tomorrow you don't have it, right? So today you're looking at Jubilee results, we are at 40 billion, tomorrow we are at 35. You're thinking, what happened there? And it's probably just 2 clients that we actually lost within the year. So the strategy is then to grow the retail space. So the retail space is where you've got, again, the opposite of those two characteristics. So you don't have volatility, because for the mass numbers to move away from your book, it would require mass exit. And then 2, it's not price competitive, it's service competitive. It's about how well we serve you. So our investments for Jubilee is really focused on making the experience for you as an individual product owner within Jubilee to be such an experience that we're able to keep you and partner with you throughout your journey, right? That means that we're able to keep you from the beginning to the end without having to discuss price. We're discussing how well you're serviced, how comfortable you are, how leave-free your life becomes. So to answer that question is, to manage the risks that come with the corporate space is to simply grow the retail space and diversify.
Excellent. The mic.
Hi, Paul.
Hello.
I'm Jason. And I have two questions for you. So my first question is, I'm trying to understand this insurance space, but from the investor point of view. What are the three key things I should look at when making that decision on whether to invest in an insurance company? What are the three key things that I should look at? And my second question is a bit interesting because it's not related to insurance. It's actually around capital allocation. So Jubilee has an asset book of about $1.4 billion. Of this, about $943 million is invested in government securities, and $190 million is in associates. So when you have such a large asset book, you then have a significant role as a capital allocator within the continent. Africa needs more money to be allocated. How do you see Jubilee playing in Africa's capital allocation story?
Okay, so let's start with the first one. So 2-3 things that you would look for when you want to invest in an insurance company, and I'm going to keep it within the alley that we belong, and that's just basically analyzing your financial statements. So number one, the size of the balance sheet. Okay, so remember in your capital structuring conversations, the flexibility of a company to be able to take advantage of opportunities to come is based on the quality of their capital. And for us, it's probably number one. Today, Jubilee can be able to take advantage of any opportunity that comes for us, which means that's good for an investor. Two is historical profitability performance. Okay, so while the biggest difficulty we have in the insurance company is keeping the profits non-volatile, meaning they don't shoot up and shoot down and shoot left and shoot right. A certain stability of results. If you look at our profitability S-curve, it is one of the most steady you're going to find in the region. And then third, like I quietly advertised, right? We have been the most consistent dividend payer. So you as an investor, you want the moment you put your money in a share, it grows. But you also want for the duration that share is invested, something is coming back to you, right? So you're not just waiting for the share price to go up so that you can figure out whether I'm going to sell it and make this and realize this capital gain or not, right? So while you're holding that share, there is actually money that is coming back to you. We are the only insurance company, Jason, that has been very consistent in giving back to the shareholders. Now, coming back to the second question. So investment is not a straight line consideration. Okay? When you're thinking about investing, it's not straight line. Right? You cannot automate investment decisions. That's what I'm trying to say. Okay? So investment decisions are very period specific and very situational specific. Now, when you look at our book and you look at how government securities investment have grown, you will actually notice that it has grown the last 2 years because the environment allowed us to do so. I mean, it's a no-brainer for us to have taken advantage of the huge spikes in returns, right? And make sure that we're taking full advantage of the yield curve. Especially because the government bonds that are being offered for long term means that they have locked that interest rates for a very huge duration, regardless of whether they actually pay the euro bonds and such, right? That becomes their business. So we're able to take advantage of those returns. So capital allocation around, and especially specifically to how your asset book looks like, is not straight line. It's very situational. It's very, it has got to be opportunistic in its nature. So for example, several years back, we stepped into Uganda, we made a huge investment in this company called Bujagali. It's an energy space. So you can imagine, great. So you probably have a very good feel of the kind of magnitude that we're talking about and the complexity that comes with the energy space. I mean, today, if you ask me what's happening in the energy industry space, I've got no clue. But the kind of returns that we have gotten from that one investment has not only covered the PBP within a very short period, we have been on the profitability ends of that investment for years now. Okay, so 2-3 years back, you tell somebody we're thinking about investing in energy space, and they're going to be like, yeah, the risk associated with that ones are huge. One is because they're a very consistent dividend payer. 2, their shares are always on the up, right? So we are always having this capital position. 3, and within the Kenyan context, we invested in that in dollar. And we also how the shilling was behaving against the dollar, right? So we also had some very, 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 very huge unrealized gains around Forex. So for as long as we part with some of that money, it becomes realized Forex gain, which is very, 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 very good for the business, right?
Yes, so on that, sorry to hog the mic, but on that share of associates investment, right? So do you have any other plans? How do you go about deciding what sector to invest in? Like, for example, you made the energy investment. I'm not so sure if all of that 193 is in energy, but how do you go about making that decision, and what do you look for when these opportunities come to you?
Specifically, what I want you to take away is specifically that investment decisions are taken with a whole analysis backing it up. So it's not a straight line. So today, if you ask me if I'm going to invest in a particular company, tomorrow I'll probably tell you, hold that thought. I'll come back to you, right? Because there's a whole analysis that needs to be done around that, and then an investment decision is done. Yeah.
Any last questions? Yeah.
Hi, Wanjiko. My question is related to what he had asked, but now more specifically related to like products. You know, in the like microeconomic going-ons of our country, we have people who do many different jobs that may need to be insured. Think of like a farmer. If there's drought, they lose their income. Think of someone who just has a vendor where they sell fruits or something. If there's some sort of catastrophe and they lose all their products, they don't have a way to have income. So have you guys thought of a product that caters to the majority of Kenyans who work in such jobs? That's my first question. And then my second one is, what does Jubilee do in terms of like sustainability? We know how meeting the SDGs is a really huge global goal. And so what have you guys been doing to towards that issue, yeah.
Okay, so let's start with the first one. And I know I'm answering it broadly, and there is a lot of specifications around the strategies that we are doing to address that question. But it's a question, again, it's a question of insuring the uninsured. Okay? It all boils down to that question. And that is top of our mind day and night. Okay? So don't get me wrong. For those who already insure, it's about making sure that we can be able to keep their experience so good that they understand the value that we bring to them for them being already our customers. And on the other hand, we are thinking about those whom we have not already reached. And there are various aspects of doing that. So I already talked about product features, for example, right? So I can tell you without giving too much away, there is a very, very, very specific team that we have set aside to actually look at the needs that we have not met. Come up with a product for those needs that we have not met that is being able to be tailored, to be able to go to those people and tell them, look, we have thought about you and here we are. That's already ongoing. Then 2, it's about the distribution networks, being able to reach. So for some of the people that we have not insured, it's not so much that we don't have the products they are looking for, it's just that we have not been able to reach them. Okay, so that is being answered by the distribution investment that we are doing. So like I said, for example, digital. So we don't have to have intermediaries trying to reach out to you. We can actually be able to access you exactly where you are for as long as you've got the digital means to do so. Then even the traditional distribution aspects themselves. So being able to expand our branches, being able to expand our coverage for our personal finance advisors to be able to reach out to you. And then a whole, wide marketing that we're doing, just creating awareness of our brand and making sure that we can be able to become a trusted partner in that purchase. So it's a whole, can I call it ecosystem that we are thinking about? So from product to distribution, and to creating the awareness for you to be able to know what to buy, right? And then finally, and most importantly here, when you talk about, for example, the microeconomics and the kind of high cost of living situation that we have, especially specifically for Kenya, we are being very specific about how we're going to be able to price those products. And to be able to price those products, we need to be cost efficient. So to be cost efficient, we're investing a lot, especially in technology, to make sure that we are very efficient in how we manage costs. So the moment you automate several processes, then you need less than 10% of the employees you have. Whenever you invest in fraud detection, it means you're paying less than 10% of the claim that you used to. All these avenues where we spend a lot, which ends up impacting the price of products we give to you, we're also rethinking around that, to be able to reduce that cost, reduce the pricing, and therefore be able to bring products to you that are very, 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 very affordable, right? Now, coming into the ESG space, I was for sure knew that question was going to come at some point. I was getting worried if we get to the end of the question and that did not pop up. But all of you know that's a quote-unquote a new space that is emerging. It's about environmental, social, and governance impact for us as a Jubilee and as a company, right? It's called the corporate responsible citizen. So there is a lot that we are doing around that. First, we have started complying with the integrated reporting aspects of it. And if you guys interact with our 2023 integrated report that is already on our website, you will notice that we have given you an array of things that we are doing in that space. You can interact with that report a little bit in detail. But just to give you an example, most of you know we have moved our corporate headquarters. No?
Tell them where they can find
We have not been selling here. Eh? We need to come back here so that people can come to our offices. Or it's because we are very digitally driven, so people don't necessarily need to know where we're physically located. Okay, that's good news still. So we moved to Upper Hill, I think this year as of 2-3 weeks ago. And I think that building has already been certified as a green building. Already. Okay, so about how we manage energy from solar, waste, recycling, and all these aspects that cover the first aspect of an environmental as one has been taken care of. We're already taking care of that with exactly where we work. Okay, so there is a lot that we are doing around becoming ESG compliant. We have already set up aside a full department within the group to manage the aspects, the detailed aspects of embedding ESG into our strategy. And you're going to see a lot of that becoming a broad aspects of our reporting and a broad aspects of our conversations around strategy and engaging with the customers going forward. So right now it's still the building blocks. It's heavy, but it's also very exciting to be able to align ourselves to the SDGs and be counted for as a responsible partner in what we're doing. That's all I will say for now.
Thank you so much. I think we have exhausted all the questions. The final question with a brief answer.
Okay.
Hi, my name is Angela. Mine is more of a personal question. So in your position as CFO, you broke down how you focus into 3. How do you ensure that in your role, you're as efficient as possible? And also, how do you merge your leadership style with the strategic goals of the company?
Yeah, when you said personal, I was trying to figure out personal for whom. Right? But let me put it this way. When we began the conversation, I sort of touched on the roles of a CFO. And I touched on the control role, then the regular role of reporting, then we come to the top, I call them the top tier roles of a CFO. And this is where we start embedding ourselves as CFO into what the business is doing. So first of all, the first one is business planning. Now, I can tell you between July and October now, right? My entire investment of my time is interacting with the rest of the entire company in understanding where we are going next. So product development, growth strategies, compliances, outlooks of macroeconomics, various regional specificities around where we play, and eventually put that picture together to say, this is probably where we're going to land as far as all financial matrices are concerned. So the role of a CFO is so central in that conversation because of this. And you guys, for those of you who are aspiring to become CFOs, let me give you some bit of encouragement. When you think about all other functions in a business, so think about a typical ExCo. So you've got the CEO, the CFO, the COO, probably the head of distribution, probably the head of HR, and so on and so forth. Everybody else sitting in that space is an expert of their area. So they will come and they will say, this is what we're going to do about distribution, this is what we're going to do about products, this is what we're going to do about governance, that's your company secretary, and so on and so forth. The only one person who sees how all these pictures fit together is a CFO. And that's my role. So my role is to be able to see what everybody else is bringing into the space and how this impacts the business, especially financially. Because the truth of the matter is, there's a very, very, very different role for a CFO for profit and for non-profit organizations. And I work for a profit organization. I don't work for an NPO. So bottom line is important. How we make profit is important. How we sustain our balance sheet is important. So depending on the strategies and the initiatives that the rest of the teams are bringing into play to be able to answer some of the questions that you guys have been asking, my role is to make sure that all those eventually make sound finance sense, right? So you talk about leadership style. That's very personal, but I'll tell you this. It's about being able to be a team player. The number one requirement the day you sit in front of a panel to be interviewed as a CFO is your business partnering aspects. Okay, can you become a business partner? You know, we largely come from what we call a control function, where it's don't do the do's and the don'ts. Right? That's how we are. That's how we emerge out of our academias, right? But eventually, what will make you stand out is being able to understand that you need to become a business partner. So, I deploy a lot of consultative, lot of leadership. Right? It's being able to integrate with the rest of the team to make sure that we are putting together a picture that moves the business forward.
Thank you so much, Paul, for coming today. We are really very grateful, and we wish you all the best and your company all the best and your endeavors. And much appreciation to the audience for coming in today. And until next time, bye-bye. So I'm going to ask.